Are you wondering how much your accounting practice is worth? Whether you're thinking about selling now or 10 years from now, understanding what goes into your firm's value is essential. In today's video, we're gonna break down the 5 key factors that can affect the price of your accounting firm and how to get the most out of your sale. First off is location. An accounting firm's location will have a huge impact on the number of potential buyers for a practice. In general, there are more buyers in large metropolitan areas and fewer buyers in remote rural areas. When you sell an accounting firm, you're also selling the location. Areas that are desirable, like metro or coastal areas, can help attract more buyers. When you have multiple buyers competing to purchase your practice, you can get a higher price. There's also a greater likelihood of finding a purchaser who's a good fit and is willing to pay market value. The number of potential buyers for practice is ultimately what determines the market value. If you have 0 buyers, then there is no value. If you have 100 buyers, then the value will be set by the buyer who values your practice the most. Next up is the size of your practice. There are often more buyers for practices that can be purchased and operated by a single owner. Practices under 1.5 million generally fit into this category. Compared to larger practices, these firms are easier to manage, and it's easier for CPAs to qualify for acquisition financing for these amounts. Buyers of practices with revenue greater than 1.5 million per year are often very focused on acquiring talented staff as a part of the deal. Third on our list is professional marketing. Obviously, this one's a little biased considering we are accounting firm intermediaries, but we've seen on countless occasions that professionally marketed firms tend to sell for higher multiples with cleaner terms. Owners who sell on their own not only limit their exposure to the full market, but they also end up limiting discussions to only a few potential purchasers at a time, which, as I mentioned, makes it harder to get the best fit, terms, and value. Having an experienced intermediary can guide sellers on selecting which buyers to spend time with and facilitate discussions efficiently, which helps sellers maximize their time with the prospects. This maximizes the number of qualified prospects in the mix, as well as allows owners to maintain proper focus on the business while it's being marketed. Profitability is another major factor to keep in mind. The more profitable the practice, the higher the price. More buyers are certainly interested in highly profitable practices where average client fees are high. Higher fees equate to more money for less work. That being the case, profitability doesn't have the impact that many would think. This is primarily because there are many capable, experienced buyers who are confident in their abilities to increase the profitability once they take over the firm. The profitability of a firm is usually quite malleable. From our experience, most practices sell in the range of 0.9 to 1.3 times gross fees. Keep in mind that most of our practices sell for a fixed price at closing. While the industry standard is 1 times gross fees, not all practices sell for that amount. Ultimately, it depends on what a buyer is willing to pay, how a buyer is willing to pay, and what a seller is willing to accept. And finally, our purchase terms. There's an old saying, you name the price and I'll name the terms. Accounting practices can sell for fixed prices. In fact, many of our practices sell for 100% cash at closing. However, many private transactions involve lengthy earnout periods, which can be taxing on the owner who's ready to exit the firm. We believe that sellers take way too much risk, and this is often reflected in the terms. If you want to know more about why we think you should avoid an earnout, check out the link in the description below. So there you have it. 5 key factors that determine the value of your accounting practice. Now keep in mind, there can always be situations where other factors impact value. Employee competitive threats, partner non-compete issues, non-recurring revenues, and declining clients are other common issues. So if you're thinking about selling your practice, keep these points in mind to get the most out of your hard work. If you found this video helpful, don't forget to give it a thumbs up and subscribe for more insights on growing and selling your firm. And if you're ready to take the next step, you can check out the link in the description for a confidential valuation of your practice. I'm Brannon with Poe Group Advisors, and I'll see you next time.